Hey, good morning everyone, and welcome to the video edition of Traders Espresso for the morning of Wednesday, February 15th, 2018. The written blog is posted. Yesterday was an interesting day. Everybody was looking forward to the CPI number, and it came in hotter than expected. Predictably, okay, wait, there's more, but predictably, the futures sold off. The Dow was down, I think, as much as 400, maybe more points in the futures. When the other indices followed suit, when the cash markets opened, initially they traded down, but then something very interesting happened at, I think it was around 8 o'clock, and the futures followed suit on this. They started trading higher, and all of the indices ended up anywhere between 1 and 2%. I think the Dow was the biggest gainer. I didn't copy the numbers. They're probably here. One second. Actually, the leader was the Nasdaq and the Russell. They were up just shy of 2%. Then the Dow was up 1%. Okay, but what happened was, this was yesterday's close where I'm pointing right here. Okay, this was the open. All right, the Dow traded down initially, and it stayed down. It would look like it was recovering, and then around 8 o'clock, it crossed up into positive. And for the next 2 hours, it traded back and forth through yesterday's close before finally firming up at about 15 after 8 o'clock. I said 8 o'clock. It was 10 o'clock Eastern time. Before it firmed up at about just shy of 12:30 Eastern time, and then it spent the rest of the day, except for this little dip here, trading higher and closing up 200 and something points. All right, 253 points. The dollar was down. Initially, the dollar was up, and gold was down. Then the dollar was down and gold was up. Treasury yields climbed. There's a lot of people warning about a 3-year handle on, or a 3 handle on the 10-year treasuries. Well, we're just about there, because yesterday it closed at 2.913, and this morning, last time I looked, it was at 2.915. And I don't really see it showing any signs of slowing down. The yen continues to strengthen, which is a flight to safety. I also looked at the Swiss franc. The Swiss franc is strengthening against other currencies I looked at. I looked at it against the pound. I looked at it against the euro. I looked at it against the dollar. The Swiss franc is strengthening, and dollar's down. Gold is down for some reason today. So, as I said on my written blog, when things don't pan out as you might predict, when relationships and correlations that you normally would take for granted aren't occurring, it's a time to sit up, take notice, and start asking some questions. And I think that there's some questions worth asking, which is, when the equities market has been fearing inflation, and we get confirmation of that yesterday, why did they not trade down? I mean, they did initially, but then they traded up, which tells me that traders were dismissing that. Why should we not worry that the Fed is going to pay attention to that and go on a more aggressive rate hike path? Why do we have people explaining inflation away as apparel, being this unexpected spike in apparel prices, when if you back out apparel, the consensus was for a 0.2% month over month, and even if you back out apparel, it was still 0.2%. Even if you back out apparel, it was still 0.3%, so it was still hotter than expected. Why do you have people saying that? Either equity traders know something, the majority of equity traders who bid these indices up know something that we don't, or they are dramatically, embarrassingly, and painfully wrong. And we won't know probably for a little bit which one of those answers it is. But for right now, if you look at the futures, they're still trading up. The Dow futures are up 224, the Nasdaq futures are up 46, the S&P futures are up 17.5, and the Russell futures are up 9.2. So that's 90 basis points on the Dow. That's the leader. The Nasdaq is up 70 basis points. The S&P is up 63, and the Russell's trailing up 60. VIX is down. VIX futures are down. As I said, the dollar's down. Crude is down. It's still above 60 though. So it should be a pretty interesting day in markets. I guess after yesterday, it wouldn't be surprising to see futures trading up and having them get hit, and having the indices get hit and trade down today. I'm not predicting that. I just wouldn't be surprised to see it. So that's pretty much it. I mean, the biggest thing is just trying to explain why yesterday shaked it. You know, why yesterday shaked out the way it did, or shook out the way it did. You know, again, when things don't go as you expect, when relationships and correlations that you normally would expect break down, it's noteworthy. So I don't think there's anything wrong with asking those questions. Anyway, good luck trading today. Stay nimble, stay agile, avoid large losses, and take profits when you can, because I think you're going to need to. That's it. Have a great day.